everyone, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Yes, thank you for joining us for episode 1 of a brand new show, which is going to go out every Tuesday morning, where we answer your property questions.
We've got so many great questions in already. And before we do our first ever question, which is really excited, let me tell you how to submit your own questions so you can get your voice on here and, more importantly, your question answered. It's really simple. All you have to do is call 013808 00035. I'll give you that number again. Call this number 013808 00035. If you give that number a call, leave a message, ask us the question. It's normal rates, so no premium numbers, and we will answer your question in due course. Or you can go to thepropertyhub.net/podcast and follow the link there to leave your recording that way. Either way, leave us a question and we should answer it in the near future.
Okay, the privilege of asking the first ever question on Ask Rob and Rob goes to Niraj. Let's have a listen to his question.
Hi, Rob and Rob. My name is Niraj Kumar. Hope you guys are well. I'm a long-term listener and have been following you guys right from your very first podcast. And I guess you guys are doing a great job for the property investor community. Anyhow, my question is regarding setting up limited company. Given the recent changes and the situation with the recent budget announcements, I'm seriously considering maybe buying future buy-to-let properties through limited company. This, having read through various property forums and websites, and this whole area looks a little bit cloudy to me. So I hope you can somehow address this. In specific questions like if you know any specific companies or brokers in this area, like normal buy-to-let market where they can source the lenders for limited companies. And also if limited company is a good way to, save and reinvest into your property empire. I think to me, in my head, it makes absolute sense, but happy to hear your thoughts on that, because based on my calculations, the larger the portfolio, the more sense it makes to hold properties in a limited company, and especially in the current scenario. Also, my view is that it's probably a demand and supply game. If more investors were to set up limited companies, maybe there will be more mortgage companies which will open doors for limited companies. And also, one thing that really confuses me is what is it about limited companies that scare lenders to lend them? Because unlike many other business loans, this is a business which is backed by assets, in case something was to go wrong with the company. It's not like one of these other type of businesses which may be purely service-based or without any holding any asset in the company. At least this business has a guarantee or some surety. If the business was to go under, they are backed by assets, i.e. the properties. So really not sure why there is so much of negativity around lending it to companies versus lending it to individual owners, even with that whole limited liability thing. So sorry for a long message, but hopefully you can address these questions. And looking forward for your next podcast. Good one. Bye.
Brilliant. Thanks, Niraj. Great questions. And, you can do that as well. If you've got a big subject but you want it breaking down, feel free to do the same when you ask your own question. So there's a few things covered here, Rob. Let's start right at the beginning, because that's always a good place to start. And he asks, is it right to do? Should you set up a limited company? Is that the thing you should be doing?
Is it? Well, it's not as simple as a yes or no. Unfortunately, when it comes to things like this, the answer is always, it depends. And there are a lot of factors which influence this. We've actually recorded a course which touches on this subject. If you go to thepropertyhub.net/products, you'll find that. But one of the biggest factors for me comes down to assuming that you've got a job or some other kind of income, comes down to whether you actually need to access your property income on a year-by-year basis. So if you actually want to draw those profits out each year to spend on whatever you want to spend them on, then a company can make things quite expensive, because as well as paying corporation tax, which at the moment is 20%, you're also then going to have to pay tax on the dividends. If you're a basic rate taxpayer, at the moment, there's no tax on dividends, but there will be soon. And if you're a higher or additional rate taxpayer, then there is tax. So it can get quite expensive. However, if you are wanting to just leave the profits rolling up in the company for some point in the distant future or to buy another property with, then it becomes a lot better, because if you're a higher rate taxpayer, you'd be paying 40% on your profits if they were in your own name, or 20% within the company. So there are loads of other variables as well, but that seems like quite a simple test to establish whether it's something that might be worthwhile.
Absolutely. And as Rob said, we've gone into real detail in this in a course. So go to thepropertyhub.net/products. It's a free course that we've covered in length on this subject, or go to the show notes today, where you can find all the show notes for all the episodes we've done. This is obviously episode 1 at thepropertyhub.net/property advice. So if you go to thepropertyhub.net/property advice, you'll find the show notes for this episode, and all the others will do. Okay, so his next question was about brokers. And yes, many brokers will struggle with the concept of lending for limited companies because they're not specialists. So like you should with any buy-to-let mortgage, you should be looking for a specialist. Not somebody who does a bit of buy-to-let in the background, or maybe 20% of their work is working with investors. You want a mortgage broker who specialises in buy-to-let, because chances are they'll have experience then of working with investors who use companies to invest with. And let's face it, more and more people will probably start using companies. So brokers are going to move their focus into it and find more options for the investors they work with. Your answer to brokers? Find a specialist. That's what I'd be looking to do. Now, this links nicely, Rob, into his next question, which is, will there be more lenders entering the market? It's one thing having a good broker, but he needs products.
Yeah, and I think there absolutely will be more lenders looking at this. Lenders follow demand. So if more and more people are forming companies, which seems likely, then the lenders will go there as well. Historically, lending has been the biggest issue, probably the biggest factor in why people don't form companies, because the market is restricted and interest rates tend to be higher. I think that's going to change. I think if this does become a mainstream practice, then lending will completely disappear as an issue. Of course, the flip side of that is if this does become completely mainstream, then there's nothing guaranteeing that the currently quite generous tax rules around property within companies will stay as they are. That could always change as well. But for better or worse, I do think that it's going to become a lot more common. And the upside of that is that lenders will not be seeing this as the hurdle as they previously did.
So if more lenders will move into the market, which I agree they will do too, because, the money is there, so they'll follow the money. Why is this negativity around limited companies when it comes to lending? Why are lenders scared by it? Well, it's all in the name. It's limited company, so there's limited liability. The lenders can, if they lend purely to the company, can only go after the company. So if the company gets in trouble, they can take the assets of what's in the company, but they can't go after you. That's the beauty of having a limited company. If you are an individual and you get into trouble with your buy-to-let mortgages, then you can not only go after the property that you own, but actually after your other assets as well, your personal assets, because you haven't got limited liability. And actually, a lot of people know that, but it's true. So that's another benefit of getting into a company. Now, what I think a lot of lenders will do is they will start to lend to people through limited companies, but they may be looking for backing, assurances, guarantees, if you like, from you as an individual as well. So they may want to see you are, financially secure in the background and ask you to put your name to that to make sure the lending goes through. The other reason is, if you've just started your limited company, it's got no track record. You as an individual, when you go to get a mortgage, you've probably been getting credit for many, many years. You've had an income for many, many years. They can look at you over a long period of time and go, yep, that person's a safe bet. With a limited company, if it was formed only a few weeks ago and you're suddenly trying to get lending, there's zero track record. So I can completely understand why there is the negativity and the reluctance to lend, but I think what they'll just do is get you as an individual to offer personal guarantees to get the lending through. Certainly while your company's a young company, but then it becomes more established and there'll probably be more options open to you. However, as Rob's already said, more lenders will enter the market, competition will increase, and the products in general will get better. As we speak currently, and obviously products change all the time, Metro Bank are doing lending to commercial companies, limited companies, at under 4%, a brilliant rate. By the time you listen to this, there may be even more in the market at better rates, but that's a good start.
Yeah, so I think the message that's coming through is that it's a changing market. Things are changing all the time. The negativity that's there now will probably go away. Options will open up. I would say, though, that if this move is being prompted by the recent budget announcement, by all means consider it, but don't feel like you have to rush. You don't have to form a company straight away. There's time before this kicks in. So take some time to see how the market shapes up, how things shift, what guidance comes out, what products come out, and take it from there. This is going to be, I think, probably one of the big stories of the next few years, the whole kind of tax thing, the whole limited company thing. There'll be a lot more information out there, so just keep an eye on it. And as we said, we've done a course on this, and we've got a couple of episodes of the Property Podcast on this. You'll find all the links to those within the show notes at thepropertyhub.net/property advice.
Now, Ask Rob and Rob, it's really a mini mastermind for you for a few minutes each week, and we'll give you some advice. But what we have is a much bigger version every quarter called the Property Summit, where we get a small group of people, just 16 people every quarter, and we do a full day's worth of masterminding. Now, if you'd like a bit more than Ask Rob and Rob, and a bit more attention and a bit more advice from both ourselves and other switched on investors, then grab yourself a place. Really simple to do. All you need to do is text Summit, 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 a space, and then your email address to 88802. So if you'd like to book a place on our next summit, text Summit and your email to 88802 and you can grab yourself a place there.
For now, though, thank you for listening to the first episode of Ask Rob and Rob. I hope you'll join us again every Tuesday morning and on Thursday mornings for the Property Podcast as well. For now, though, we'll see you very soon. Bye-bye.
Bye-bye.